welcome today to everybody for the release of the second quarter Q2 2026 Michigan Future Business Index, or the MFBI as we like to call it, a survey which has been conducted 41 times, which is slightly over 20 years since 2006 in some form or another. So this has been a really a staple of the business community. MBN Speaker Series, as you know, has been going since 2004. And we have 7 or 8 live events and a webinar each year. Various speakers. Our audience gathered today is from across the peninsula, both peninsulas of Michigan. And this is going to be viewed live with us at this time. The recorded version has a very good track record of being checked out by many, many more for those online and who get it in a timely fashion for their schedules. So we want to thank you for joining us virtually in our expanding and ever-growing audience. These events, as I say every time we have one, don't happen without sponsors. It just takes a ton of money, a ton of resource, a ton of everything. And we want to thank the sponsors of this event, LAFQ, Dean Transportation, Shaheen Chevrolet Cadillac, Capital Region International Airport Fly Lansing, which is where this studio is housed. Our state sponsor for this, statewide sponsor, and some other upcoming events is the Better Business Bureau of Michigan. The Michigan Future Business Index does not happen without Sinair, and you're going to hear from them and their CEO in a little while. Also, the Michigan Business Network, who originally put this thing together umpteen years ago, and ROI Insight, and you'll meet Paul King in a little while. He's the guy who has done this since almost the beginning and helped us filter out what the questions and the answers really mean. Now, our presentation of the hot off the press Michigan Future Business Index is going to be delivered by Mark McDaniel from Sinair. He's that will be at just about the top of the hour, and he is the CEO of that company. However, first we want to touch base with a few now as we go around our virtual room for our popular community roundtable to get 1 or 2 minute updates from each. So is there anyone here from LAFQ? Sometimes we see them pop up in a timely fashion, sometimes not. I will give this report on behalf of Kelly Ellsworth Etchison, and that is that they have money to lend. How's that? And they have a good interest rate, and they do a lot as a credit union in this community to help not only their customers, but others with things like financial education, lower rates, et cetera, et cetera. Dean Transportation, I look around and see that there have been for a while shorthanded of bus drivers, and I know it's not the school system, but maybe the deans are all out there transporting somewhere, somebody. Shaheen Chevrolet Cadillac, though, we do have Jason Cords here. So Jason, give us a little update on what's happening in your industry.
Hi, Chris. Thanks for having us on and getting us this update today. But the biggest thing in our world right now is I'm building a new collision center on campus, and so we're going to be moving off MLK. We plan to go live the beginning of November with that 35,000 square foot facility, state of the art, all brand new stuff. So we're excited about having that on our campus here, and we needed the space over there because of our parts department. It just keeps growing every single day over there. So exciting times in the fixed ops direction with us, and with General Motors. We got a little light on product with some changeover on EVs and maybe moving a little bit further back to gas instead of EV, and hopefully we hope to see some hybrids coming down the road. It's just to stay on pace with the rest of the world. But things are exciting in our world. We're just happy to have General Motors as our partner, and things are going good.
Well, they really are. General Motors is a great partner. As Jason knows, I've come out there like 15 days in a row trying to order a hybrid. So hopefully they are coming pretty soon. But
Right.
I appreciate that. Okay, with that, let's move to Paul King. Paul, you're there. Paul is more familiar with this thing than probably anybody else alive. The Michigan Future Business Index. Can you talk a little bit about what it is and why it's so important?
Sure. Hello, everyone. We've been doing this, as Chris said, it's been in since 2006. I've been on this project almost as long, but it has been an invaluable resource for information for not only the business community, all of us, but also the press and those in charge of agendas and budgets want to know, what's happening, what are the challenges in the business community, what are the celebrations, what's working, what isn't. But it has also, in the last 10 years or so, been able to track specific things. Like we get down into details about, for instance, COVID during the pandemic, asking how that affected folks and tracked how well they were doing through it, and how quickly they were recovering. Now we're doing the same thing with tracking other things that are in the news, like tariffs, inflation, the war in Iran, all of those things, and how they're affecting businesses and business costs as well. So it's a great way to keep track of everything.
It really is. And one of the points I think, Paul, that you made is really important is we're responsive to current issues.
Yes.
There is this
Yep.
core underneath that allows us 20 years of trending
Yep.
that really gives us an indication. And especially if you extrapolate for your prognostications, but also jumping into these aberrations, which sometimes will really cause changes in those trends. But if you catch them, there's the explanation. And
Yep.
Paul, I want to sincerely thank you for the great job you've done for us for so long. Appreciate it.
Been a pleasure.
All right. So Mark McDaniel, President and CEO of Sinair, he leads their team of 170 financial experts, innovative thinkers, policy analysts, and other professionals at Sinair. Nationally recognized for his visionary leadership, Mark has over 45 years of experience in affordable housing, community development, urban planning, and market research. His passion for helping people and communities is pretty infectious. And I have to tell you, I know it firsthand as we've been longtime friends. He lives to serve others honestly and to inspire those around him to find their why. In 1993, Mark launched the Michigan Capital Fund for Housing, a tax credit fund to support affordable housing in Michigan. And if I'm not mistaken, you were sharing your first office with the secretary. Is that right?
Yep, that was, yeah, over on Lenawee in a little historic home that when I came to it, they told me it'd be furnished and it wasn't.
Oh, two camp stools and a desk, I guess is how.
Well, yeah, that's pretty much what it was.
Yeah. And since then, now known as Sinair, the organization has invested over 7.3 billion in community and economic development across an 11 state footprint. Mark, I want to thank you for being a big part of this for so many years and for Sinair for recognizing what an important instrument this is. So with that, buddy, take
All
it away.
right. Thank you, Chris. I feel like I should be wearing a mask because I'm getting concerned my identity is going to be related to always giving like not bright news around economic conditions because I had to do the one last time. Because as you said, it's the worst report we've had in all these years. This time isn't much better, but I don't want you to think that I'm like this. I'm into doing this and promoting this idea. So I did have a mask out in the car because actually until an hour ago I thought this was in person. So I was going to wear a mask, but it's out in the car. Um, so anyway, let's get moving. Actually, when I read this whole thing, I felt like I was watching the movie Sybil, if any of you remember that. It was about a woman who had like 10 different personalities, all with different names. Which is pretty much how I felt in reading this. Um, this is all kind of all, there's like conflicting ideas here from an intuition standpoint, but um, versus last report compared to this one, um, there's been growth in sales, and people are planning for more in spite of all the challenges with inflation and tariffs and war and rising health costs and that. But the problem is, that's great, you're having more sales, but your profits are going down. And profits are what makes businesses work. So on one hand, it's kind of good news. Yes, your sales are up, but you're not making corresponding amount of money to long term, I don't think, to support it. Um, Inflation has risen up the ranks of being one of the top issues now that people are challenged by. Same thing, it's just overall uncertainty of everything. Um, it's kind of like everything. There's just uncertainty prevalent everywhere. Um, but then next is it says, optimism is starting to rebuild, which there's Sybil again. It's hard to imagine, but people are projecting future sales being positive. But at the same time, there's a little optimism around all these challenges that we have. Minimal profit increases, and hiring and wages will probably be stagnant. Healthcare costs, which we all know that healthcare costs just keep going up and up and up. Most, kind of the majority of people indicated they're not planning on passing that on to their employees. But there's going to come a point in time, if it keeps on this track, that we're all going to have to look hard at that, which will be more of a burden for those people who are already stressed with their ability to keep their home going. Um, Obviously, the war in Iran has had a major impact on all of our economies and our personal wallets. The tariffs continue to be placed out there. Most recently, 50% on Canada now because they can't control smoke, which is like one of the most ridiculous things I've ever heard. Like they're supposed, I don't know whether to put a big huge fan at Lake Superior and blow it north. I don't know, but you know, all these things are they're having an impact on the economy overall, and I think pretty significantly in Michigan versus even a lot of other states. And the majority of people now feel, compared to the last survey, feel that the federal government's not benefiting their businesses. Um, Certainly, that's the case in the nonprofit world. A lot of the things that are coming out of this administration have been pretty devastating to a lot of nonprofits. Um, and it continues. Some of the things have been challenged in court. This is the world I'm in. They've been challenged in court. The court has held up the claims, which is great. But once you stop something, you're always going to be behind. So you can't really catch up, even though the program might still be available. And a great example is administration's been after the community development finance institution space, which a lot of credit unions here in Michigan are CDFIs. And we all receive quite a bit of capital coming from them to go and do community development, small business loans, and that kind of thing. That money was all allocated. Republicans really showed up and preserved the CDFI programs and the CDFI because they were proposing to cut all of it. So $720 million went to OMB months ago that was appropriated, but the director of OMB decided, I'm sure with direction, he wasn't going to release the money. So he's been sitting on it for months. Big uproar about it. and it has supposedly has been released, but a lot of us aren't seeing that yet. So I think they're still slow walking this, and they're still coming after CDFIs. If you look at the proposed budget that administration came out with, they were killing the CDFI program totally, but it's being preserved so far. There's a lot of other things that were not preserved that are support net related things that nonprofits, basically, that's how they do their business. Um, Anyway, past 6 months, these are the numbers behind what I've just said in regards to the percentages. Um, is 35% of the survey people are saying, sales have increased. That's up from 9 points. If you've got only 19% reporting profit increases. So wages, um, yeah, I think you're going to see basically a stagnation in wages across the board. I don't think you're going to see the wage increase fight everyone's doing to attract talent like we have the last few years. Certainly for us, that's the case. We're on a hiring moratorium. We're looking really hard at our existing staffing and looking at if somebody leaves, do we actually need that position again? And be prepared to know that no, we don't need that. We don't need that title, but we can distribute the work in another way. This is where AI comes in, that we will over time through attrition and staffing, understanding what our needs really are with technology and that. The size of the company will decrease. We're not doing it through layoffs, but it's through a strategy of getting the right size to increase our profitability. So you can go to the next one. Satisfaction with the economy. Already set out, you can kind of see the numbers, but I'm surprised 53% say they're satisfied with the economy, but there is an increase of dissatisfaction, which I think all of us kind of feel. You can see, the retail, food service, and nonprofits are the ones. I'm adding nonprofits because later they're included in some of these numbers, but they are very dissatisfied with the current condition. So go to the next. This is just shows you over time how satisfaction and dissatisfaction, they're kind of running neck and neck now. There aren't real extremes, and it just seems to be bumping along this path that we've seen pretty much since the pandemic started. Not big swings. So next, challenges. Still retaining talent is acquiring and retaining. That's still kind of number one, but it has ticked down some in regards to how much of a challenge that is, which would make sense if people aren't hiring, people are thinking about, I'm just going to stay where I'm at. But at the same time, they're keeping the people that they have. They aren't leaving like they were before. Inflation, obviously, that's up. Finding and retaining customers, that's pretty much the same. For our world, we have more customers than we can serve because everybody's capital constrained and we have a lot of capital, but we don't have enough to take care of everybody that we might like to. So we're having to say no to a larger number of developers now than we have basically since the Great Recession in our ability to invest in their deal. That we don't have enough capital to do everything, even though we had a historic year last year in capital raising. We are again going to this year. We don't have enough for the demand that's coming to us because there's others out there they haven't been able to raise the kind of money that we have. Um, Uncertainty obviously is up. Insurance about the same. Economy weakening. That one again, that's a civil number for me. I I thought that would be much higher, given everything. Government regulations, I guess it depends on who you are in all your industries. For us, this would be pretty much up to the top three for us because government regulations are really having a hard hit on our world of development, economic development, um, and the work that we do. Interest rates, tariffs, again, thought tariffs would have been higher based on the other information that we've already seen. You can go to the next one. Issues impacting small business. This is pretty much what you've already just heard about inflation, but these numbers, I think, give you a better feeling of this, that 9 and 10 say inflation is harming their business. More than 2/3 are citing healthcare costs, 60% cite tariffs, over 50% are blaming interest rates for harming their business. And all those issues have gotten, for small business, a lot worse over the past year. And over 50% now are saying the war in Iran is having a negative impact on their business. It certainly is in the construction world that we deal with. Costs keep going up. I think I said last time in Detroit, building basically a two-bedroom unit apartment, basic two-bedroom unit apartments, about 425,000 a unit. That's up to probably closer to 450 to 475 now. In the rest of the state, it's bumping up against probably 375 to build a basic apartment that supposedly is affordable. And that's driven by pretty much all these things because so much of materials need petroleum. The equipment needs oil and gas and to build things, and so it just is kind of compounding our world. AI is obviously taking off and growing. Everything around AI now seems to, in the media, has been centered around data centers, and everybody is against data centers now. Unfortunately, there's so much misinformation out there about this, and I have to say that has bled into other economic development opportunities. They have nothing to do with data centers. It's just anything you propose in a community that is economic development, you have a mass of people turning out saying, we don't want that. These proposals around the mega sites and data centers and all these kinds of things, there's such a movement behind, it's almost kind of like a dark movement that's behind all these things that are really using the media and misinformation, which is really killing off interest by city managers and planners and even some of the economic development corporations, which is hard to believe, that it's just negative about any kind of development now, which is very scary. For the state of Michigan needs to get it figured out because people are already leaving here. And we can't let that happen. And there's just this mentality now that is seeped in. I think a lot of it's driven by our politics, but that's something that this is a nice chart for the visuals in the group to see these numbers and a chart of where people feel they're being impacted in their businesses. Next is another good visual chart in regards to tariffs and the war. Those are pretty significant numbers of negativity about the impact that this is having on businesses. Profit margins, that's definitely That's already was a problem before this even started. So it just has made that worse. Impact of the federal administration, that there definitely is a stronger feeling than in recent years about the impact on the federal government on small business. And it's interesting, the responses were a lot more. This was a note down here. The responses were more negative prior to the negotiated ceasefire between the U.S. and Iran at the end of June. Well, we're back full blown back into this again. So I would imagine these numbers are probably lower than what they're probably going to be in another couple weeks. Another nice visual chart to show you what's written there. And the next one is, another reflection of, all right, greatest, we're going to talk about optimism now. Greatest reasons for optimism. There definitely is demand for products and services. I mean, just our world, our demand for what we do is beyond our capabilities to deliver to everybody. Business growth and expansion. This is another kind of one that feels a little bit Sybil-ish, given everything that we've heard already. But I have to say, for us just to stay ahead of the curve on our profitability and our ability to raise capital and find more good deals, we have to expand geographically. It was not a plan, but we have certain investors that have told us, if you go to these states now, we will invest this amount of money with you. Because there's other areas around the country are saturated, and so they're seeing their money isn't getting spent, so they want us to go into some of these markets where they feel they have a really strong need. Staff, our employee, I think all of us are probably, going to say we got wonderful staff, we have great people, they're committed, they're passionate, they're, to the work we all do, which is a great thing. For any of you that say, boy, man, my team really sucks, you got a problem. And loyal customers right now, it's funny how some of our partners who kind of go back and forth with us, all of a sudden they're showing up talking as if they're the loyalest partners we've ever had, trying to convince us of all the good they've done for us. And, we know what they've done, what they haven't done. And they're kind of in the second tier of, if we're going to do deals, they're kind of in the second tier of the partners we want to work with. Elections, politics, hope for political change. Again, yeah, hope for political change. I could see that going up. And this last one, I kind of laughed at this, like optimism for retiring, selling, or closing a business. Retiring. So there's optimism that I'm retiring at the end of next year. So great. I'm glad that's positive for everybody. Next on our sales profit increase projections. Again, sales going up. I don't know. I still feel like, the profits are either going to be stagnant or at best going forward under the conditions that we're under now. The more positive side of this is in certain industries, retail and food service. They're very optimistic, but healthcare and nonprofit sector isn't quite so much. Same thing as it relates to profits. Hiring projections. I think, as I said in the early part, I think hiring is going to be pretty stagnant. We're trying to figure out how we don't have to hire more people and work with what we have by introducing stronger technology and really looking at our staffing and what is it we really need for the future based on strategy that we can put in place and what we don't need. Um, at the beginning of it, for us, at the beginning of this year, first time ever in 33 years, we laid off people. Hated it. It really hurt that we had to do that. It was one division, uh, lack of performance for 3 years in a row, and we had to do something about it. Um, so that was not pleasant. But I think that you've seen the big companies already been doing mass layoffs. Um, and I think in general, people just aren't going to be actively hiring going forward until we kind of get through all this. Um, Talent acquisition improves. Um, there, I'm not, that one because there aren't I don't think there's as many opportunities out there. This is one I would look to Paul on. When you have your chance, I'd be interested to hear you kind of address this one because the dynamics out there, it doesn't feel like, it's easier to attract because I would think people want to, unless you've been laid off, or you see in something in the future that the organization isn't sustainable and you're getting out. But I think most people are going to kind of sit tight and not do anything for a period of time. But I'd like to hear a little more about that. Wage inflation, we're just going to do cost of living this year. That's all we did this year, unless you were promoted. And same thing for next year. I think that's in general is probably what a lot of people are going to be doing. Healthcare, we move past, I think we've got a pretty good feeling on that. Investments and business growth. Um, we've been big in employee training for a long time, but this year we cut back on our training consultants and our vendors that participate in that part of our work. Just trying to get our expenses under control. And I think that's probably what people are, they see that as it's nice to be able to do when you have the money to do it. But when things get really, really tight, that's one of the areas you kind of trim and you don't totally kill it, but you don't necessarily bring in big programs like we might have a few years ago. New product lines and services, probably not the time to go out in the market to try new things, which I'm not surprised that's down some. Of course, we're doing something opposite. We're coming out with a whole new program next year on attainable housing, which is workforce housing, not the low-income housing. And that's a new product line we're going to have and also raise a fund for it. So I'm concerned about it, but there's a lot of demand out there for that type of housing. I just don't know if it can be built cost effectively. We'll wrap this up with conclusions. Again, it's not the most positive report again. It is interesting to see that people have optimism in some areas. And I am concerned, about, sales are increasing, but you're not making a lot of money at it. uh, that's troublesome. I could see it maybe in a short period, but we're 3/4 of the way through this year, and it's not looking like we're going to be out of that for a while. And I don't know how you sustain an organization that way. So again, that's something for Paul. because I'm not an economist. I'm just telling my gut feelings and what I'm living, day to day on. But I'd be interested in that. Um, and which is really nice to see, is the majority of the survey participants still think Michigan's a great place to do business and it's a great place to live. I believe for me, I think we're in one of the best states there is for a long-term future, given all the resources we have, the technology we have. I read an article this morning is that military contracts, defense contracts are really strong in Michigan because of all the technology we have and the skilled workers we have. We're becoming a hub for that. I still believe this is the place to live and raise your family. So thank everybody for listening, and um, I'll turn it over to you, Chris.
All right. Thanks, Mark. I appreciate that very much. The information that you just shared, of course, is going to be published this afternoon on the Michigan Business Network, or MBN websites. It's also on the Scenair website. So if you want to go recapture this, and then it's going to be sent out and shared as you please to do that. It's kind of interesting because hiring is off. It's at a standstill, so to speak. And a lot of that is because businesses are uncertain. And the one thing business hates is uncertainty. So they can't plan. Well, if you can't plan, then you're not going to hire for what you are not sure about a future. So they are telling us at the same time, talent is at a premium, which is basically saying to us, we're not hiring unless real talent comes by. That's a real paradox in that message. I had lunch yesterday with Kevin Guskowitz, the president of MSU, and it was about exactly this target and how to get higher education into getting people more ready, work ready, I guess would be a good way to say it. Yeah, go
If I
ahead.
can say one thing about that too, um, some of the other numbers to keep an eye on are the numbers inside of the big number, which is, are you having more trouble finding qualified employees or just anyone at all? And when you see that qualified number go down and anyone at all going up, that is usually when we're in a area of trouble where hiring is going down, they're pulling in, and they're just not finding anyone to fill those roles.
Yeah.
They're kind of backing off on hiring because they just can't find anyone to come in.
Yeah, no, I
Yeah.
totally agree. It's almost like a mismatch of talent out there and the needs in industry.
Yeah.
The other reason, and I know that Mark mentioned this, that people aren't leaving like they were, it's because they have no place to go. That's mostly
Mhm.
it. If down the road is not hiring, they can't move. They had mobility 12 months ago, 18 months ago, they could go anywhere, they could leave anywhere. They don't have that at this point. And
And
then,
these businesses are keeping them because they don't have anyone to fill these other roles, and they're taking on new positions
yeah,
in addition to what they're already doing. They're, paying these employees to stay. So there's
yeah.
that too.
Well, and the interesting piece is that's why wage inflation is not as high as it was as
Mhm.
a worry, because they don't have to pay them more to keep them. There used to be a competitive piece to that. It's interesting, the optimism about growth and expansion, and you said that's kind of Sybil-like, and it is. Here's the one thing you have to remember when you survey the business community. And Jim and Tim, you guys will bear this out, looking at your membership, and Jim Martinez as well. 96% of those surveyed are going to be small businesses. And small businesses really are run by the leadership much more than large businesses. And unbelievably, small business has this wonderful, optimistic view of the future, no matter how dismal it is, much more than big corporate executives. So that's one of the reasons optimism jumps up at that point, because the majority of people there. Anyway, thanks, Paul. And we're going to stick around a little bit if there are other questions. Paul, is there anything else you want to add?
Yeah, there were a couple of other things in here. Overall, this was the thing that kind of not really shocked me, but it was an interesting result. Um, Before the MOU, Memorandum of Understanding, and the ceasefire in the war, these numbers were a lot more negative as far as uh, direction of the economy, their own personal economies, their own business economies, how things were impacting them as far as inflation and the rest and tariffs. Everything was more negative. But once that ceasefire happened, I could see the numbers climbing. It was evident to me how much this war is impacting small business.
Yeah, no, it really is. Well, they're able to follow the dollars, actually. Nakia, we're going to go to you now because we want to get some perspectives from around the state. Nakia is the Chief Marketing Officer, and thanks for Better Business Bureau of Michigan's support with the MFBI. Please share a little bit about your news in 2026.
Yeah, so it's always amazing how much our surveys align with your survey every year. The same thing with our accredited businesses. Those rising costs continue to be a big concern, regardless if it's wages or the health insurance, very similar. So I won't repeat that. We already talked about that quite a bit. But touching on that AI, as we discussed a little bit earlier, we did host our summit. And artificial intelligence for business, it's kind of a two-side issue. They want to use it to Mark and Paul's point because it is helping save, maybe you lost an employee. Can you use AI? Especially agentic AI is becoming very popular. And that's where it's beyond a bot. It's kind of a self-thinking artificial intelligence that you can train it, give it a knowledge base, and it can actually take actions without you doing anything. So it kind of becomes an employee. So we have a lot of businesses that have been asking us a lot more about that because it is a cost savings for them. But that's something that, from the ethical standpoint, we're seeing people concerned of how do I do this without making consumers upset? Because as we discussed, a lot of consumers, are a little bit more concerned, how is this affecting the environment, things of that nature. So businesses want to understand, if I use AI, how can I use it ethically and safely and make sure that my consumers are not going to lose trust in me? So that's something we've been working on a lot. And just in general, operations, professional development, those always tend to be issues with that staff training. And then we also have been seeing a lot of questions just related to how to get skilled trades employees. It continues to be a big issue. And that's something AI can't fix. There are some things that humans physically still have to do. And we have so many young people who, went into college and did that sort of professional training. So now a lot of our skilled tradespeople, they are just begging for employees. So that's a big concern.
It's kind of interesting because one of the topics that came up yesterday at lunch was soft skills and how the new workforce has a lack of soft skills. And that's one place we got to do a little work. Again, Nakia, thank you so much, the Better Business Bureau. Jim Holcomb. So let's talk a little bit about, your broad perspective.
Yeah, Chris, thanks not only for the work you're doing today, but the work you've always done supporting the business community, just making sure our communities are thriving and strong. You're greatly appreciated, and for all the people on who, kind of coordinate with you. We're all in this together, and I think that's what I hear mostly from my members is we look for an outlook for the rest of 2026. I wish it was more optimistic, but they look at political dysfunction. They look at both parties, and they're looking for somebody with answers. They want stability, as you talked about earlier. They want common sense policies, and more than anything, they just want more seriousness in the policymaking arena. They want people that are out there really trying to debate the issues. I think both parties right now, as we look at it, I don't see a lot of policymaking going on at the federal or state level because of the election coming up, and both parties are kind of going through their own civil wars. The Democrat side with the Democrat Socialists of America, that's really I think going to hamstring them in some elections. I think a lot of people are frustrated with the Trump presidency and some of the trade policies and some of the impact on the economy. But then they look to the other side and see a stated agenda that says, I want to end capitalism. I want to abolish the Senate. I want to, make sure that everybody gets everything for free. And they just don't see that. The interesting part is with some colleagues across the country last week in DC, a lot of people who say they're going to vote DSA in the Dem primaries, when you show them what the DSA agenda is, they're like, well, that's not what I mean by socialism. I just want people to be treated more fairly, and affordability is certainly the buzzword for everything. And I think if we do see policy making, it's going to be around that. There are a lot of people hurting, and we need to make sure that we're doing it. The kind of the challenge I think for all of us on this call is just making sure it doesn't lead to more government overreach, where governments are coming in and saying, "I know how to run this business better than you," or I think Mark was talking earlier, just the constraints when you're trying to develop it, all the regulatory structure. We're going to see that, but. Biggest issue we're seeing, I know other people on the call are working in cooperative land. This is data centers. We need data centers for a modern infrastructure. We've had them for decades. The demand is only growing because of the way we live our life for a modern economy and a modern lifestyle. And it's really how do we make sure we get some of the $7 trillion of investment over the next 5 years here in Michigan and do it responsibly? And we think it can be done if people are willing to have the conversation. People raise a lot of good questions in communities. They've got to make sure we're answering those questions, but we can't have a lot of NIMBYism, as was referenced earlier. We can't stifle our growth. We need more businesses, more job providers, more population, and it can happen if people are committed to, civic debate again instead of, just politics as usual.
Well, you're absolutely right. As the lead advocacy group in the state of Michigan, the chamber gets over there a lot and follows policy. I don't think I've ever seen them lined up on their side of the aisle farther apart from each other than I've ever seen the last two surveys.
Yeah, it's frustrating too because a lot of people in the policymaking world, they're lining up behind follow the leader. You talk to them individually, and we're just seeing we have politicians now. We don't have statesmen or leaders. We need people to step out and say, I want to take Michigan in this direction to make sure we're strengthening communities, helping people around their kitchen table economics, and making Michigan welcoming, growing state for everyone who wants to be here. We want everybody here.
Yeah, and stable besides.
Yes.
Jim, thanks a lot. And thanks for the great work you do. I appreciate it.
Thank you.
Julie Pinkston, Choose Lansing, is always a good indicator is how much people are traveling and how much they're spending in other cities, et cetera, et cetera. How's your industry?
I wish I could match that sentiment. That is usually good news, but tourism and hospitality is actually struggling pretty solid across the state, even nationally. The airfare pricing has really gotten a lot of travel curtailed throughout the country. For the first time, 2 straight months, TSA checkpoints nationally are down due to those price pressures. Probably good for Jason Cords because they'll start taking more road trips maybe, and if the gas price would come down. So some of those pressures on the economic side are tough right now. In Michigan, through June, our numbers go through June as a state, and the state's about in hotel occupancy up 1.6%, which is pretty much flat. A number of destinations are down negligibly, like 0.1, 0.2, including Lansing. We are actually up 0.1, which is flat. Detroit's the high spot with their up in hotel occupancy 4.5%. So they have had some significant events and things taking place there. So that's good news. I think the main message is how Mark started this out is that the sales are still there. The people are still traveling. People are still doing what they need to do, but pricing is a concern. Our restaurants, our hotels, they're all struggling right now. So the flat occupancy and the higher costs are not. there's a gap there. But I never like to talk only about the gloom and doom. We do have some high spots here in Lansing. We had a really significant event just a few weeks ago with the USA Clay Target shooting event out at the Mason Trap Shoot Grounds. We had about 3,000 archers come in from around the country for a national championship, and they were definitely spending money while they were here. So that was a great weekend for us. Green and White Days is taking place right now. There are prospective MSU students all over campus right now, which is also fantastic. And those will be hopefully future Spartans and their families here. And just as a side note, the East Lansing City Council this week approved an expansion to the rooftop of the Graduate Hotel. And that's something that they have wanted, our guests have wanted. So a bright spot there to be able to welcome more people to that very unique destination in the Lansing community. So got to end on a high note.
There you go. Thank you very much. You always do. For someone who took over their job, 2 days before COVID, you you've done a pretty marvelous job keeping us on top. Ray Thalen, President, CEO of The Right Place over in Grand Rapids, the economic development group for the west side of the state. How are things in your world?
Yeah, thanks, Chris. Good afternoon, everybody. Just a couple quick things. First, I'd say, Julie, a couple tourism observations. The smoke is going to have an impact. I drove by Michigan Adventure by Muskegon. It was closed for 2 days, and we had families staying in a campground up on Lake Michigan, and the park was half full because people stayed home, and I think we'll see those in the numbers. And Mark, want to say nice job on your presentation. It's good to see you. It's been a few years. And Jim, you should run for office given that last platform speech you gave. But so here in Greater Grand Rapids, I would just provide a few different updates. We've had some major projects come online that have produced a spark of activity in our market. Sometimes big civic projects serve as anchors to the economy and create that activity we like to see take place. So we opened up a new amphitheater, an outdoor concert venue called the Acrisure Amphitheater, 12,000 seats. And it's just been amazing to see that venue filled up so consistently with all the concert activity. We have a professional soccer stadium that's wrapping up construction, will be in play beginning next March already. And Grand Valley State University is breaking ground on what they call their Blue Dot facility, which is taking their computing and technology teaching across every discipline on campus. And it's the largest building project in the university's history, taking place right downtown on the riverfront. So excited to see those come online. We've had some private sector projects, although I will admit, to Mark's point, the project pipeline has been more challenging in terms of trying to find companies that are looking at making step increases in their size and scope here in our community. So we've really had to hustle to find good projects and work even harder to see them across the finish line. But Proper Beverage is a bottling and canning company. They've got a $90 million expansion. Weiss Technik is a German sort of industrial equipment testing company. They've got a new facility that's just opened up. And then Simplicity Communications is a fast-growing tech company that put their headquarters in downtown Grand Rapids. So excited to see those things come through. On a more macro level, I would say the projects that we're engaged with, it's been a multi-year trend, but it's picking up, is the projects tend to be much more capital intensive, much higher wage, but fewer new jobs per project. So they're investing more heavily in equipment and robotics and automation. That demands higher wages because of the complexity of the work, but it also demands fewer workers per project. So that's been sort of the math that we've seen. This is relatively consistent with Mark's earlier comments, but as we visit with 600 companies per year as part of our retention program and cull some information from those visits, talent had been the overwhelming number one topic for companies for about 12 years. And 18 months ago, it shifted to sales. Companies were struggling, I think, as furniture and auto were kind of in a very soft moment. The recognition that they need to go find new markets, and defense is the hottest market that our companies are going after right now. More broadly, unemployment here has actually declined from 4.2% a year ago to 3.6% today. One of the things, and it's job growth, not labor force reduction. That's the one thing we are watching pretty carefully as we age and the baby boomers really accelerate retirements. Are we going to see unemployment numbers feel better than they are because so many people are exiting the workforce? So, you can improve unemployment by lowering that top number of those number of unemployed, or you can adjust the number of people in the workforce. So we're watching that pretty carefully. And then two last things. We have Tech Week Grand Rapids coming up in September. We're aiming for 20,000 people over the course of that week, hundreds of different sessions around the community. And if we can get to 20,000, it'll be the largest tech event of its kind in the Midwest. So we're gunning for Minneapolis. That's the last one for us to take on. And then data center conversation, we're deep in it here. Microsoft has 2 rezoning requests in front of 2 different townships. We have another company that hasn't fully disclosed who they are yet, but they're pursuing a project on the north side of Grand Rapids. combined at full build out, it could be as much as $15 billion of new tax base to the community. And just to put that in perspective, for one of the townships, that one project, so 15 billion would be across the three projects, but just one of those projects in one of those townships would be an increase of 400% to their property tax base. Across the county, and Kent County is not a small county by any measure, but it would be about a 15% increase to the overall tax base of Kent County. So you talk about how do you fund the libraries and the zoo and the school and the roads, the police and fire protection, and reduce tax rates. This is what we need to be striving for. And a couple of things I would end on. It's as we've engaged with some of the opposition groups, it's very well organized. It's national in scope. If you look at how people are combating these things, there's an element of NIMBYism because change is hard to grasp sometimes. And these are big buildings. I don't want to discount that. But the pushback is nationwide. If you look at community to community, the color schemes are the same, the narratives are the same, the signage is the same, the approach is the same. It's not organic necessarily. That said, through work like we've done with Jim Holcomb and Jim Martinez, thank you. We've identified that the three primary themes are electric rate concerns, water concerns, and noise concerns. And I would just say, with Microsoft, they have submitted their plans, they've submitted their sort of response to these concerns, and everybody on this call should recognize by law in Michigan, we have a belt and suspenders regulatory environment where nobody here on this call could impact the rates of other users in the state, and the data centers have the same obligation. The MPSC has to hold those through contracts, and it requires billions of dollars of upfront capital from these data centers to ensure that they pay for their own infrastructure and cover their ongoing operating costs of energy going forward. So we have that protection double over in Michigan, one of the highest regulatory sort of hurdles, if you will, of any state in the country. On water, they talk about millions and millions of gallons. They will, Microsoft's proposal says 7,000 gallons per day. Just to put that in perspective, that's about 20 households. That's about half a swimming pool per day. It's about the amount of water the office building that I'm in right now uses. So it's nowhere near today because of closed loop systems. It's nowhere near what people are led to believe. And then finally on noise, Microsoft has submitted their rezoning application committed to be 20% below the zoning or below the current noise ordinance in the townships that they're engaged with. So every other business, every other homeowner could have 20% higher noise by ordinance than what they're proposing. So if, to Jim's point, if we can have an open discussion and a proper dialogue, I think these community concerns can be directly addressed and we can reap the benefits of that incentive, of that investment. So with that, Chris, I'll take it back to you.
Yeah, Randy, thank you so much for being here. Appreciate it. And the great job you do over there, my friend. Keith Lambert, Lansing Economic Area Partnership, the Lansing Economic Development Group for Mid-Michigan. How you doing, bud?
I'm doing great. How are you, Chris?
Good, thank you.
This has been a
What's
great
up?
discussion. I want to start with data centers because that's Randy and Jim, I think, hit a lot of the key points. We cover the Lansing Tri-County area, about 500,000 people here in the center of the state, and have the same exact sort of, perspective. And we're dealing with three projects, one of which was a small sort of infill urban project that some people might be familiar with, Deep Green, and they got pushed out of town by not a rural facing crowd, but an urban neighborhoods fear mongering around environmental concerns that aren't real. And yet that project was lost, $120 million. The city of Lansing is very financially desperate. A lot of municipalities are facing tougher municipal budgets than they've ever had before. And data centers are such an obvious answer in terms of the tax base injection that doesn't come from anywhere else, quite frankly. So it's frustrating to see that loss, but there are still two large hyperscalers that are looking at very large scale multi-billion-dollar projects in the area. So we're kind of grappling with that too, like Randy and like others have talked about. I want to focus on some good news. We did just receive notice a couple weeks ago that CNBC's America's Top States for Business ranked Michigan number 6. I will also caveat that with, I don't know that we can hold on to that because a lot of the economic toolbox has been defunded into 27 and moving forward. So that's a bit of a challenge, but As of today, we're still seen nationally as a good state for doing business. Ohio is number one on that list. We compete with Ohio directly on a lot of investment projects. Also, shout out to MSU, Michigan's State University, for being in the top 6% of universities around the globe. So that's a huge asset for us in the region, us around the state. I want to hit on a few big industry projects. LG Energy Solution continues to ramp up its $2.6 billion battery plant. They're hiring 100 people every month or two right now. And they're hiring very well and easily, maybe easily is a strong word, but they're not having big issues with hiring at 21, $22 an hour for those sort of semi-skilled, low-skilled jobs, technicians, which has been interesting to hear when you do talk about some of the labor challenges being experienced. Another company, Niowave, had one employee when they spun out of MSU's facility for rare isotope beams 20 years ago. They just crested 200 employees, and we had a groundbreaking, celebrated their new building out at the Lansing Airport a couple months ago, and they'll have another 70 jobs as part of that. They're partnered with Novartis, so they have a pharma partner that will actually do the cancer treatment drugs. Ionetics is in the same boat with partnered with Lilly, but making the same sort of radio pharmaceuticals. So Leap's very focused on that within the context of growing life science jobs, helping to diversify our manufacturing technology bases. Um, We've also been seeing a lot of interesting activity in the place-based realm. We just had the Howard, a project that Leap's been monitoring very closely downtown East Lansing, finally get approved. 12-story building, over 100 million investment, right downtown, redeveloping a kind of crummy block that the current owners and current businesses are like, yeah, we need some work here. It's going to be an additional 300 units or so of residential in downtown East Lansing. And then the ongoing 28-story Tower on Grand downtown Lansing is well underway. I just actually floated by it on the river, and they were putting glass up, and they have about half of that building built so far. And we're doing a lot of Leaps, taking a role, doing a lot of additional placemaking projects. So kind of the big brick sort of projects, but also, farmers market. We just celebrated City of DeWitt with a couple $1 million farmers market enhancement where they'll finally have a physical space. First time since the late 1800s that they've had a true community gathering space in DeWitt. And they're very excited about that. Similarly, Grand Ledge, JC Park, right along the Grand River, west of Lansing, built a new accessible playground that Leap put some money into through placemaking dollars. That, again, rough budget. The RAP, revitalization and placemaking funding, is no longer available, but very, very popular, rural and urban. And that program, the state legislature decided not to fund again. So we had some brutal moments with the new budget that's come out. We're working with what we've got. We have seen a pretty nice uptick in the pipeline. I agree with Randy's statements from mid 25 through like March or April. It was pretty rough, but we've seen a good uptick since May. And I'm hoping that we can land some great projects here in the Lansing area over the rest of the year. And appreciate everybody around the call for all their great work making things happen in Lansing and across Michigan.
Well, I think you're going to see a pent-up need being answered pretty soon here. Hey, Dave Krumberg, thanks so much for joining us. Director of Business Growth at NLEA, Northern Lakes Economic Alliance. Dave, why don't you start out, just explain very quickly what NLEA is.
Sure. Chris, thanks for the invitation to join you here. Mark, I really learned a lot from your presentation. Northern Lakes Economic Alliance was established in 1985 to facilitate the economic transformation of Boyne City. If you know Boyne City, Michigan, today, it's a world-class tourist destination, and at the same time has a healthy manufacturing base buzzing in a carefully planned community. Charlevoix County was the first county to engage NLEA, and since that time, 40 years later now, we're engaged by Sheboygan County, Emmett County, and Antrim County to be those counties' economic development agents at large.
All right. So how are things going?
Things are going good. As I listen to the different reports across the screen, I want to touch on a few different things. Tariffs. Our manufacturers are being squeezed by the increase in price in tungsten. One of our manufacturers uses cans. The lids of the can are made from an imported steel. The body of the can is made from a domestic steel. So the price of the lids is going up. The rest of the can, the price is staying the same. So that's an interesting, subtle insight. Another trend is that a lot of the manufacturers in northern Michigan have deep enough market penetration that they're steady, they're solid, they're staying engaged with their customers. However, we're seeing several small manufacturing shops being bought by holding companies. The owners of the companies want to exit rather than looking at employee-owned options or locally owned options. They're finding results with sales to larger holding companies and equity companies. So that's good because the jobs stay. The challenge is that there's a less locally involved company now with the ownership being remote or at a distance. But no major upheavals to report. Things are solid.
Whoa, you saved the day. Thanks, David. Appreciate it. All right, Tim Damon, CEO, President of the Lansing Regional Chamber of Commerce. How you doing, bud?
Hey, I'm good, Chris. Thanks for the opportunity to be here today. I was jotting down some notes before today. I will tell you everything that I had to talk about has been touched on. So I guess going last, there's a lot of great speakers on here and a lot of really good things happening. I was thinking back to January when we did the Mid-Michigan economic forecast and some of the things we were projected to watch there, and both of those projects we talked about at that time have been hit on here, deep green. And I think the only thing I'll add on that, with that not, the $120 million lost opportunity for the city of Lansing, the city did just a week ago a moratorium on data centers, and we somewhat laughed at that, and I think our statement said that the moratorium essentially went in place when they did not approve that project back in that April timeframe. But we were equally excited to see the Howard project and the Graduate get the approval they needed from City of East Lansing just on Tuesday. And despite all that, we look at downtown Lansing, and there are some challenges, and probably not unique to just the city, and challenges we're seeing probably around the state and country. But you know what? The growth that we had projected over the last couple of years and is moving forward, and well over probably $300 million. There. I think we still believe that state employees need to be more of a consistent return to office. We feel that that's a critical part of what what our region's economy is, and especially downtown Lansing. And we've heard all the arguments against that. We can't put the supporting small business on the back of state employees. But when we listen to the conversations here today, and we just talk about some of the challenges that our state has and trending downward in so many of those key benchmarks and indicators out there with what and how we're competing economically, that it should really be an all hands on deck here to really help solve and turn some of this around, as well. Keith mentioned, I think the Niowave groundbreaking, and I think we had a 2-week stretch here where we not only had the groundbreaking for Niowave, but U of M, Medicine, and Sparrow had the groundbreaking for the new Ambulatory Center on Michigan Avenue. We also had the WILX groundbreaking on the south side, and Jason mentioned the Shaheen, and that was a busy day there with WILX and watching the construction there at Shaheen. And then the MSU Foundation, announced, I think, a $20 million investment and moving into a new facility as well. So it was a great 2-week stretch there. And I think we have to continue to celebrate some of those, the progress, on there. For our organization, we've had an opportunity with, through some of the elections, especially the U.S. Senate and some of the congressional, we're going to be in the national spotlight there. And we've had the U.S. Secretary of Energy, the U.S. Secretary of Housing and Urban Development in the city of Lansing here in the last month. And next month we'll host the U.S. Secretary of Transportation, and that will be out at the airport. And so I say that only from the standpoint it's great exposure for a lot of our businesses and resources here, from the airport to the BWL hosting the Energy Secretary, to when the Housing and Urban Development Secretary is here, the opportunity to tour that Walter French development as well as the Brick Road development, which I can look out my window here and see on Michigan Avenue. So those are all, I think, real exciting things that are happening here. Anytime you can get that high level folks from DC in here, better understanding what our community has, critically important. So we'll leave it there. We talked about the elections back in January, and I think, a lot of things been turned upside down, I think, in the past couple of months, especially in the gubernatorial side of things. But I think they're all kind of shaking out. And Steve Japping does a amazing job on our that end for us. And I think we've hosted about 15 Meet the Candidate roundtables, and we have one more next week. We'll wrap up with Haley Stevens, who's running in that U.S. Senate, very competitive Dem primary. We had former Congressman Mike Rogers just in this past Monday, so it's been a busy time. And last thing I'll say, and this is for a lot of the local folks around here as well, that in the August 4th primary ballot, we will have 25 ballot proposals from Ingham, Eaton, and Clinton County on that August 4th primary ballot. 13 renewals and 12 new. So that speaks right to the regulatory climate that we all know is very, very challenging in our region, in our state. But that's a lot to think about, 25 ballot proposals in our 3 counties on August 4th. So.
Well, the important message is get out and vote. Make sure you get heard. Thanks, Tim. I appreciate it, and always the great job you do, my friend. Allison Henry, Director of Business Development at the Middle Michigan Development Corporation in Clare.
Yeah, hello. Thank you for having me. So I'm with Middle Michigan Development Corporation. We cover Clare, Isabella, and Osceola counties for economic development. Very similar sentiments across the board, but it's been crazy, especially in the last year for us. We've been doing a lot of site readiness work. I actually was able to submit 2 of our featured listings for the MEDC's My Sites program, and I have one that is moving through to step 2. So working on our site visit that's planned for September on that. We've also taken a really big leap in childcare and housing in the last few years, as a lot of people are aware. Obviously, we need talent for everybody across the state, and in order to have talent, we need childcare and we need housing for those talent. So we've been trying to help build some of that ecosystem back up for our counties. We actually established a housing coalition for our 3 counties earlier this year, and we've been doing some surveying, trying to figure out what tools previously existed, what currently exist, and what we can do to further support our municipalities in advocating for additional tools. We're also working, like I said, with childcare. We have been leading the region-wide wage initiative program. And that, thankfully, we have another person that is entirely dedicated to that, because that is a very large undertaking. But we've been able to help provide stipends to childcare workers across all of Region 5. And I think it's $200 for part-time employees and $300 for full-time employees per month, just to help increase their wages and increase their retention as well. So that way we have a better base to advocate to our companies for being able to hold spots for their employees and the further cycle that we have there. And then recently, we also started a program with Retail Strategies. We're doing some more development in the commercial space and trying to help, because all 3 of our counties are very rural. Mount Pleasant, where Central Michigan University is, our largest population for all 3 counties. So trying to help support our municipalities in every way that we can. So there's a lot more that's going on that's behind the scenes, as we all know, and we're all kind of swimming upstream. So that's all I'll
Well,
bore you guys with for right now, but thank you.
Allison, thanks so much for that reporting. Give my best to everybody out there, would you?
Will do. Thanks.
All right. Jim Martinez. So how are things going at the Detroit Chamber?
They're going well, and just I'm a kind of new face to the roundtable. So Jim Martinez, Vice President of Communications and Business Intelligence at the Detroit Regional Chamber, and good to see a lot of partners on the call. And Chris and Mark, I was flipping through our State of the Region report, and happy to see some stats from this index last in 2025 on small business sentiment. So thank you for all the work that you're doing there. On a couple points that folks raised with data centers. I'll take a little bit of a different approach. We do statewide polling with the Glenn Gariff Group and Richard Schuba, a very Michigan's probably one of his top pollers. And in terms of data centers, a couple things that are important to remember is according to our polling, and this is statewide, just not the Detroit Regional Chamber, so 600 respondents throughout every region of the state is, and this data is all within 2026, 66% of Michiganders didn't express an opinion on data centers. So you've got a very hyper-local, energized with national influence and a lot of fear and uncertainty driving more of a minority opposition. And when we went back and polled people and asked about their concerns, you could get to a plurality of support if you address utility rates, water consumption, tax incentives, non-disclosure agreements, a lot of the things that are driving fear and concern, very legitimate fears and concerns in some of those categories. And so what that tells us is we're closer to the beginning than the end of this conversation. And I think it's incumbent on some of the larger organizations. And it's great to see Jim Holcomb and Randy Thielen on the call, who are partners with the Detroit Regional Chamber in the Michigan for Responsible Data Centers Coalition. I put the link in the chat for folks. Really, all our responsibility here is to help drive the fact-based conversation, address some of these fears head on. And I think what we're finding is I'll be making public comment in South Lyon on Monday in favor of a data center project where the construction company Wallbridge is actually doing a separate project in that community to address a longstanding drainage flooding concern that will help the community, but then also clear the way for the data center, at least from the flooding standpoint. They still need other rezoning approvals. And I think it's just important for us, especially the larger organizations, to get out there and, one, show the public officials that there is support, explain the benefits, but then really drill down to that community and show tangible benefits like the Wallbridge example that I said, as well as the tax base growth increase that some of the other speakers touched on. Because a lot of the Main Street chambers of commerce, so to speak, they're in the communities. It's their businesses that are going to get boycotted directly. And so I think, when we talk about, some of the regional chambers like ourselves and some of the other regional chambers, we're making a concerted effort to get out there and drive that fact-based conversation. And when we get booed down, which happens to me, by the vocal opposition in the room, follow up with a letter to these resources, because that $7 trillion that Jim Holcomb talked about, that's coming by 2030, and Michigan needs to get its share.
All right, buddy. Appreciate it. Thanks a lot. Thanks for being out here, and give my best to everybody back at the chamber, eh? Warren Call is on right now. He's the president and CEO of Traverse Connect, and I know out there how beautiful it is. You're dying to get outdoors, so I want to get this. I want to get you on.
Hey, thanks, Chris, and I appreciate the opportunity. I had to join late. We had an event today. I want to touch on a little something just to reiterate what Jim just said from the Detroit Regional Chamber, the data center discussion. We took a little bit of a kind of a holistic approach from the Northern Michigan Chamber Alliance. We hosted a data center event last month in Gaylord, kind of bringing the Northern Michigan Chamber Alliance members from across the footprint. And we actually had them invite their municipal leaders. So we had like 75 township and county officials there. And shockingly, we were able to get through an entire itinerary of discussion, utility providers, energy, environmental. We had a U of M professor. We had township officials speak. The big thing was we had a civil discussion with 75 plus and no fights. So I was encouraged by that. I think we did some effort to open eyes and consider the thoughtful approach to this issue rather than to just have a fight at a county commission or a township commission meeting. So I was encouraged by that. We're going to take that further as we move forward. And then it opened up another conversation that we just hosted, a community-wide AI discussion. We brought together K-12, college and university, manufacturing, financial and professional services, and then technology providers across the board to address, not how does Northern Michigan adopt AI in general, but more about how can we use it specifically to address our already priorities, the priorities we've already outlined, addressing labor shortages, strengthening the education and talent continuum, and leveraging our unique assets in freshwater marine technology, et cetera. So that was a positive discussion that, again, bringing together disparate groups who are concerned about technology, but it resulted in a very civil and productive community-wide conversation that we're gonna build on. Moving to some of our more traditional areas, it was the 100-year anniversary of the Cherry Festival. It's been a very robust agricultural scenario so far, season so far. We're building a lot of hospitality hotel construction. And that also, of course, those events and all those things happening brings in the key candidates for the statewide races. So we've had a lot of good conversations with leading candidates about the future of Michigan, the future of how Northern Michigan fits in to Michigan's overall strategy across a lot of different things, especially what do we do about economic development for the state of Michigan? So those have been some good conversations. We survey the business community on a quarterly basis. So the Northwest Michigan business community, I'll give you a couple of quick stats. 96% of respondents say this continues to be a good place to grow a business. 87% say it continues to be a good place and is improving as a place to grow businesses, which is another metric we track. We always ask them, what are the biggest barriers to growing a business in the region? To no one's surprise, of course, there's housing and hiring, our top two, but here's what changed. What is new is now inflation, interest rates, and access to capital are being mentioned much more than they had been in previous quarters. So obviously, I think we're seeing the impact not only of tariff policy, but also of impacts from the war and prices. So that's something we're gonna monitor. And that's across industries. That's not just in hospitality or manufacturing or agriculture, but it's across a lot of different things. Two last things that I'll highlight. We're hosting a national vintner and winery industry event called Dirt to Glass. I'd encourage anyone that's interested in that industry and the kind of confluence of agritourism and value-added agriculture to check that out. And then the last thing I would share with you is that we're very excited about activating uncrewed aerial systems and related drone technology. We've secured the National Test Site designation with the Army and the Army National Guard to develop drone technology here centered on Camp Grayling. We're looking to do something similar at a national scale by activating Air Station Traverse City as a national test site for the U.S. Coast Guard. That's something that we're actively working on, and I think can pay dividends from an economic development standpoint. So I know I just gave you a lot, Chris, but thanks for the opportunity.
You know, it's interesting. Camp Grayling is probably one of the most wonderful spots on the planet. That camp is really great in the way it's laid out. Also, access to capital, I haven't seen that in a while, and it hasn't popped up on any of our stuff. Plenty of capital out there. It makes me wonder about that. But let me know how that follow-up goes, okay?
Absolutely.
Yeah, appreciate it. Thanks for being with us. Mary Myers, Director of Economic Development Services with the Lake Superior Community Partnerships. How is everything at the top of the mitten?
Yeah, thanks for having me. We're facing a lot of the challenges the same things that everybody else talked about today. I'm curious to see what the data will come back with on how the fires are impacting our tourism. Tourism is a big industry in the UP, as you can imagine, and we had a lot of big events last week that unfortunately had to get canceled. So that's going to have a big impact on us up here, along with the gas prices and the inflation. Energy is a big thing up here right now with the new energy legislation that was passed in 2023. We're facing a pretty big impact with some of our rice generators. So we're looking at a potential mine closure due to the cost increases if something's not done, which would be detrimental to our area. We'd have a mass exodus of people leaving the UP if that were to happen. We think we have a solution, but that's a big thing that we've been focusing on for the last several months. So that also ties into data centers. We've had a lot of interest in data centers in the UP. We have a lot of land up here, and it's cold, so we've got a lot of fresh water up here. It's been a big topic. So we've been trying to prepare our local municipalities on how to gauge those conversations with their communities and just become prepared for when those come about. But energy is a big thing on that because we don't have the energy to support them up here, unfortunately, right now. So, on a more positive note, our businesses are doing well. We had a medical manufacturer that is built a brand new industrial site in Marquette, and we're hoping that that will be a high-tech industrial park with future investment there. Northern Michigan University has done a lot of development. They have two brand new apartment complexes that they are building right now for residents, and they were just approved for some funding for a business center that will have a portion that is specifically designated for cybersecurity. So some good things coming out of that. And then downtown Marquette, if you haven't been here for a while, things are much different, have changed drastically over the last 10 years, I would say. And if you come in the next 2 years, you'll see a big hole in the ground that for a building that's being renovated downtown, which will have some hospitality businesses in there and some additional parking for our downtown businesses, which will be good. Some things that we have worked on for the housing side. We also created a housing coalition about a year ago now. We had our first housing summit this past spring, which brought together local leaders and governments to kind of work through challenges that we're facing and come up with solutions. With that, also Invest UP, our regional economic development organization, created a program called Build Up, which is a cash collateral program for housing. And then they also had loans available for very low interest rates for developers who needed additional assistance for residential infrastructure. So those are two tools that we were able to copy from the MEDC in a way for their cash collateral program, but it's for housing specific things.
Mary, thanks so much for that tip of the mitten report. We appreciate it very much, and you're doing a great job up there. All right, Mike Johnson. Mike is the Executive Vice President of Government Affairs and Workforce Development
at the Michigan Manufacturers Association. Manufacturing is doing well. I think one of the better evidence of that, and the economic development folks will probably tell you this, that other states continue to kind of poach our assets, and they want what we have, and I think that's a pretty good sign. I'll give you a few facts because it kind of remind people how important manufacturing is to the state, and these are facts I throw out to my own members to kind of remind them and re-energize them. The manufacturing employs 580,000 people in this state with an average annual compensation of $104,000. Manufacturing remains the largest sector of the Michigan economy with 15.5% of the gross state product and 112 billion in output. In 2025, Michigan exported 54.6 billion of manufacturing products, which is 96% of all exported goods from Michigan. And Michigan very much remains an automotive state with its vast supply chains, and including tool and die, which is a tremendous advantage for Michigan going forward, because the highest concentration of tool and die is here in Michigan. But tool and die is also a great example of the focus that we need to put on talent. Someone said earlier, the talent challenge isn't just about finding bodies, it's finding people with the right skill sets. And Michigan has been failing for a long time on talent. And I'll tell you, talent is the top challenge for manufacturers and continues to be the top challenge. It's been that for a number of years because, it really is what we view as a primary barrier to competitiveness. Because we can't find workers, we can't compete. Many of my members will tell me that, I could invest more equipment if I had the right people that knew how to run that stuff. But we're doing three kind of different things in the talent world. One is trying to rebuild career tech programs back in high schools. There have been decades of policy driving everyone to 4-year degrees, and we've all recognized that was a not necessarily the right path, because in a manufacturing community and state like Michigan, we need people with skill sets to run advanced manufacturing facilities, and we're challenged in that regard. The second item is the Going Pro Talent Fund. We've been driving that for years and just saved that in the budget in a very cuts-based budget. There were $7 billion cut out of the state budget, but we were proud to say we saved Going Pro. That was a very difficult challenge. But that's critical because it trains workers in the kind of manufacturing skill sets that manufacturers need. And the result of it is the average wage increase for those who go through Going Pro training is about $4 per hour. So there's tremendous value for the workers, tremendous value for manufacturers in Going Pro. And the last thing is that we do is engage with our members in terms of employer-led collaboratives. We bring companies together, and particularly a bunch of small companies who can't get a community college to say, I need to train 3 people in CNC. We aggregate demand amongst a bunch of small companies, and so that community colleges can deliver full classes for CNC or mechatronics or welding or whatever, but kind of serve our members in that way. In terms of our messages to policymakers, we kind of always want to remind them that our companies need to compete in a global economy from their Michigan-based location. Manufacturing is different than other sectors of the economy. We don't compete across street or cross county lines. We compete with the lowest cost location anywhere in the world. So it's a good reminder for policymakers. Many of them are so young. My son works for Riley Linting, who's 24 years old, and my son's 26, and he's the oldest one in the office. I mean, we have a lot of work to do to educate policymakers. And Riley's wonderful, by the way, to be absolutely clear, but we have a lot of work to do to educate policymakers on what this economy is really about. And the other thing I sort of mentioned earlier, but the efforts of other states to steal our assets. So we have to be active in terms of having consistent economic development policy, because we've kind of dialed it back the last couple of years, and it's not going well. Disarming only yields losses, not gains. So huge issue. In terms of other challenges, I would point out is the technological change, both challenge and opportunities. I mean, the change from EV, that kind of national pause, move back to ICE, and guess what? EV is going to rise at some point because the whole globe is EV. The rise of AI is critical. We have to be competitive globally on AI. But as a policy, there's issues, and we want to be supportive of data centers, but from an energy perspective, we have to make sure there's enough excess energy to not only maintain but attract industrial investment, which is very energy intensive. So we can't focus only on data centers, and we have to make sure that the energy, tremendous energy development needed, it's like quadrupling or greater of our current energy demand for data centers, leaves room for manufacturers. And that the cost of that energy production and creation is not shifted to other ratepayers, and that is appropriately carried by data centers. So opportunities there for sure. And the other thing I would point out is the uncertainty of trade and tariffs. I mean, that has cost our companies, billions and billions of dollars of trying to keep up with the changes in tariffs. It seems like it's settled, then all of a sudden there's a 50% tariff on Canadian stuff, which some might celebrate, but Canada's our largest trading partner, and it seems odd to be picking too many fights with our Canadian friends. But anyway, that's my quick summary of the world according to manufacturers.
Well said, Mike Johnson, Executive Vice President of the Michigan Manufacturers Association. Thanks for what you're doing in workforce development, because we need that. We really do. Great reports. Thank you to everybody. Again, thank you to our sponsors, LAFQ, Dean Transportation, Shaheen Chevrolet Cadillac, Capital Region International Airport, Fly Lansing, and Nakia, thank you to the Better Business Bureau of Michigan for sponsoring this statewide event. We appreciate it. Again, the Michigan Future Business Index does not happen without Sinair, who's the economic driver behind this, and especially Mark McDaniel, who was presenter of the day. Thanks, Mark. The Michigan Business Network, obviously, and Paul King's ROI Insight. Our events through the remainder of the year are going to deal with civility, talent through higher education, small business and the popular business sports luncheon. So look forward to those. They'll be on our website. And thank you to Sarah Mosier, Benjamin Robinson, Jimmy Green, and Jeffrey Mosier, our staff, for making this whole thing possible. And finally, thank you all for being part of this. We really appreciate it. This thing is really important. And you can get all of today's proceedings on the MichiganBusinessNetwork.com website. Jeff, just a quick minute. We're on a bunch of different platforms now.
That's right. Yeah. Besides the original SoundCloud, we're going out to Spotify, iHeartRadio, iTunes, Google Play, all the popular podcast forms. And recently we added YouTube Shorts, and this gives exposure to those popular 6-minute interviews, 30 to 100-fold. Those shorts are very popular with web consumers. They see those shorts and then they go and check out the great interviews on MBN.
The bottom line is huge reach. Again, thank you all for being with us today. And so until next time, we wish all of you a very prosperous